Hello friends and welcome to my YouTube channel Simply Stocks, and this is a video which tells about TANLA solution and its results, which is for Q4. So a quick video I have made for this, so let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start talking about the Q4 results of Tanla, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions about market and companies with one-line answers. For detailed portfolio inquiries and for any inquiry with respect to a number of stocks that you're holding, you can send me an email and we can work it out through a phone call. The Patreon membership goes up from $2 to $10 a month, and at $10 a month you get to access to my portfolio, what I am holding, and also access to a watch list that I'll update every week or 10 days time. Now about Tanla Solutions. Established in 1999, they provide cloud communication along with messaging and IoT solutions. They have top clients in telecom like Vodafone and Airtel, etc. Messaging solution is prime business but is diversifying into IoT and robotics, etc. and other kinds of internet things, including advertising with the acquisition of Gamoga. If you look at the numbers, and here is what I'm going to talk about the numbers. The sales have been up 63% year on year at 526 crores. The sales were around 320 315 crores or so. There's a loss of 89 crores versus a profit of 10 crores for the same quarter last year. Low profits or loss is due to high depreciation of around 84 crores that they have mentioned. Apart from this depreciation, there have been other one-offs like impairment of assets, that is cost of erosion of goodwill that has taken place because of acquiring Carex and Gamoga. This is taken up as also preemptive measure for cost of liquidation of some assets, perhaps mutual funds. So there is liquidation of mutual fund that they would have done. There's also a preemptive measure which is included into this cost of impairment, etc., which is with regard to COVID, and they think that due to this pandemic and due to the lockdown, they are going to face a lot of problems with respect to funding from big telecoms, which I guess I don't understand why would that be, but this is what they are taking into consideration contingently. And in that regard, what they have said that they are going to put up something like 38-40 crores for that, and probably that will change once this thing passes by and eventual numbers come out. So they might not be having to write off so much. So these are write-offs that they are putting forth before the thing has actually happened, just to have it in case that something of that sorts happens. So just to tell investors in clarity as to what they are thinking about this pandemic and what could happen going forward. There are also one-offs, or you can say exceptional items that are in there. There are ESOPs given to employees or employee costs that are probably will not be given every year of that sort, of that amount. So there are many one-offs that are going around at the moment, and that's why there is a loss on the bottom line. Otherwise, excluding depreciation and one-offs, the profits would have been around 34 crores. So that is my assessment. And in any case, if you look at the presentation going forward, they have a very good EBITDA number as well. So a profit of 34 crores has turned out to be a loss of 89 crores. So the brighter points: revenue in FY20 the whole year was around 1942 crores. This is up 94% year on year from last year. Gross margins for the year has also increased tremendously by 145% year on year, and on quarter basis it is up 8%. So the margins is expanding every quarter. That is a very positive sign. Cash accruals is around 199 crores, which is cash and cash equivalent that they have. This is up 143% from last year, and so they are also buying back shares, and the buyback of shares is amounting to around 154 crores, if I am not wrong, and that is extremely positive at 81 rupees that the buyback is taking place, although the promoters are not participating. The debtor days, now this is extremely interesting, that the debtor days now stood at 61 days against 112 days. So again, that is a big positive, that it has reduced by nearly half. 47% reduction in debtor days is absolutely tremendous. Post buyback, the promoter holding would be 40% irrespective of 35%. There will be nearly 2% of equity that will extinguish completely from the market, and that would also pave the way for lower liquidity of the stock, and hence probably if results continue to be better and they show profitability on the bottom line, then we could be headed upwards in the stock price, because there will be less shares available for the investors to buy. If you look at points of concerns, now this is something which is not numerical in nature, which is not, you can say, tangible in nature, but they are showing. So high depreciation consecutively for 4 quarters they are showing, and it looks like it may continue. No clarity on when this accelerated depreciation will end. It could just continue for another 2 quarters, we don't know. There are other extraordinary items that are keep coming and leading to losses on the bottom line. This is also a cause for concern. Maybe company is managing numbers for buyback. This is my consideration, nothing against the company or anything, but my assessment, maybe there is a case that for the buyback the company wants the price of the stock to be lower, and this is what is happening at 64-65 levels. I am invested in the company, and I am very much I would hold on to the stock for the next 2-3 years. But if that is being done, then we could see the numbers getting better going forward, because the buyback should end this quarter, over the next 15-20 days, or in that time frame. I don't know the details yet. The details have not come out, except for the fact that the buyback begins now. So maybe at 65 the buyback could be successful, at 81 and all that. But positives are stronger than these concerns, as promoters have bought big. So promoters have bought over the last 4 months, since January of this year, and promoter family have bought into the stock a lot, separately as well as individuals. So the promoter stake of 40% plus 10-15% of the family ownership as individuals, that augurs well for the stock going forward. If you look at the valuations of the stock, then current market cap is around 1000 crore. FY21 EPS could be close to 15 rupees if they show the profits and everything else. It trades at a PE of that EPS at 4.4 times. May see clean profits from FY21 onwards, so looks extremely undervalued at these valuations. So if PE should improve to around 18 times if this continues, and stock is still down 25% from the highs at a PE of 15. If you look at the 2022 target EPS, then expected target would be around 300 rupees. By 2022 I expect the EPS to be at least 20, maybe even better than that, closer to 22 or so. And these are APS estimates that are subject to change. If the company doesn't show profits on the bottom line, then it's a totally different thing altogether, but it should have an EPS of 20 rupees in 2 years time. So stock movement has been pretty errant. So what I am looking at is extremely volatile. Is the May see 50 levels, although it is currently very strong, but it could see levels of 50. Should bounce back immediately once the buyback happen. Hopefully numbers will see simplicity going forward, and maybe complications is due to buyback. So heavy buying by promoters is a big positive, and I see the stock moving up once numbers stabilize in 2 quarters time. So 6 months of you can say uncertainty is there. What should be the strategy? One should buy on heavy declines and look for improved results, and keep buying on declines would be my strategy. Do keep a stop loss if you are risk averse. Exit investment if you believe that the bottom line will not improve going forward. So this was a video on TANLA solutions. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.